All right,
Boom.
this is a video on how to do EMAs or how to use EMAs. This is how I use them personally. I'm gonna show you two examples. I'm gonna show you two bearish and two bullish. So let's see. All right, first we're gonna go to the daily. What I look for is a higher time frame tap of the 200. Right here, we have a higher time frame tap. I'm gonna draw a box, and then we're gonna drop down to the 1 minute for this example. All right. This is how I align the higher time frame with the lower time frame. We have a tap of the 200, and I want to see price start curling upwards, and I want to see price after, like, okay, let's say we're in a bearish trend, right? I want to see price close above the 9 and the 21, and we have momentum closing above the 50. You can see right here, price starts chopping up a little bit. We start seeing momentum fall off, and then boom, we have a candle closure above the 9. Perfect. And then I want to see momentum going above this 9, and right here we have the 21 as well. Perfect. We have momentum. What do I mean by momentum? Is a fair value gap, displacement, imbalance, same shit. It all means the same shit. Momentum. Perfect. All right. Now I'm looking at the 50. I wait for momentum to be above the 50. We break it. And then we retest the 9 or the 21 after we break the 21. Or, I'm sorry, the 50. Okay, so here we have a gap. Perfect. Momentum closing above the 50. And if you want to go technical, you can draw a gon. And we hit the 75% to the tick, which is with the 9 as well. Zero drawdown trade right here. Entry off of the 9 because you use the 9 and the 21 as continuation. You have a convergence down here supporting your bias, showing that momentum is in play and we are shifting going higher. And then for extra confirmation, we want to break above the 200, which we did have a close above, but I wouldn't consider this a break. We start chopping up. You're still in the trade. You're not break even yet. Boom. Up here, move your stops to break even, or you can put it to these lows because we're already above the 200. And if price was really bullish, there's no reason for price to go lower than down here. All right. Only reason it would go lower is to probably manipulate these lows and then distribute higher, but we already had manipulation lower from these lows. And mind you, on the higher time frame, we had a tap of the 200. Crazy bottom tick. Okay. So that's how I use the EMAs in specific. Now, if we go to the 3 minute, the same shit happened. Let's see. All right. 3 minute tap of the 200 higher time frame. I want to see price close above the 9 with momentum. Closed above. We don't have momentum yet. Boom. Momentum. Perfect. Here, we do get a candle closure above the 50, but it's not optimal in my opinion. That's why I chose the 1 minute. But you could enter off of the enter off of the 21, and then boom, we have crazy momentum closing above the EMA. You could enter here as well. It's kind of risky, but not necessarily, because you can see price held at this specific 200 on the 3 minute right here, and then we broke above it. So this would be your new resistance. All right, and then keep going higher. Now, what do you target, you may ask? You go to the higher time frame and you target other 200 EMAs. Okay, so these would be your two targets, right? Or if you want, you can target liquidity, swing highs, imbalances. Those are favorable too, but the 200 EMAs are better targets in my opinion. Delete that. So you can see TP got hit. Let's say we entered on the first example I showed, which was, where was it? Where's the box? Here. All right. All right. Wait. I'm tweaking, bro. This is a whole nother example, bro. All right. Here we go. We were here. All right. So we target this. This is the 15 minute. Then you have the 30 minute, right? And then, yeah, those would be your targets because after that, it's a new day. So, and we hit this target at 2:30 p.m. We hit this one at 11 a.m. Our entry was right here at 75. So 223 points, no drawdown on that trade. And 348 points if you just held it, or you left the runner if you're trading micros. Or if you're a baller, you're trading minis or some shit with a buffer. All right, that's one way bullish. Now, if we go bearish, let's do, I'm going to do this one too, but, oh, this one. Okay, so on NASDAQ, you can see we have the 200 EMA above. And on ES right here, we have, I don't know why it's not loading. We have the 200 EMA right here. All right, so on NASDAQ, remember, we didn't hit the 200 EMA on a higher time frame. But on ES, we did. We have rejection of the 200. Okay, this is an SMT of EMAs. It's the same.
Aura.
It works the same way as a normal SMT from ICT. I've seen it a lot of times. It's really good. But I trade Nasdaq, right? So Nasdaq was the one that failed to hit the 200 EMA, right? So we're gonna go to Nasdaq now. All right, we're gonna drop down to a lower time frame again. Okay, it was right here. So mind you, this box on ES, we hit the 200 EMA. Okay, nothing on the 15, nothing on the 5 minute. I mean, there is, but not that favorable. Okay, the 3 minute. This one looks amazing to me. All right, on the 3 minute, what I want to see here after the 200 tap, I want to see us break below the 50 EMA with momentum, or on the 1 minute as well, right? And then the 9 and 21 can be used as an entry trigger, as a retest, okay? So here, we have the 9 and the 21 converging. Then we have the 50 EMA as well, converged. Then we get a re-entry right here, or your first entry. Boom. This would be your entry. The moment we hit this 9, perfect, because we broke below the 9, the 21, and the 50. You could target the 200 EMAs again, okay? Now let's go to the 3 minute. On the 3 minute, we have the 921 and the 50. And then on ES, we have, where was it? I got to draw out the box on ES.
Bro, Lucas, I'm gonna short the 4R200, bro.
Just wait. Okay. So here, the reason none of these shorts worked, the tap was here, right? You had 1, 2, 3, 4 taps of the 200 EMA, right? The reason the short didn't work out before is because price was holding at the 50 on ES on the 3 minute, okay? What I want to see here on ES is momentum right here, displacement, by the way. That if you guys are wondering what momentum is, it's fair value gap, imbalance, displacement, same shit. I want to see momentum break below the 50 EMA, because this is, for me, in my opinion, the bias flipper. You want to see the 50 get broken at least if you want to see it go in your favor. Let's say if the market's bullish, you want to see us break below for bearishness. If we're bearish, you want to see us break above for bullishness. On the 50 EMA in a lower time frame, after, like, keyword, after a tap of the 200 on the higher time frame. All right. So
After.
Yes, exactly.
Make sure you do it after.
So we reject it. You can see price is basically holding above this line, and then boom, crazy displacement going lower. All right. Now, if you're trading ICT, this is FVG. You get a re-entry to the FVG, and guess what's on the FVG as well? In the first example I showed you, we have a re-entry on the 9 EMA. Okay. No drawdown trade whatsoever. Yet again, your stops will be above the 21, or it would be above this candle. I don't trade ES, but this would be 2.75. I don't know how much it's worth. I don't trade ES, right? And then you target
2.75 is $25, bro.
Oh, okay. All right. I'm sorry, fucking calculating ass.
Well, it's actually a little bit more than 25, but.
All right. Hey. All right. So now, my final TP here would be the 200 EMA on the 15. Why? Because you can see price has been holding at the 15-minute 200. 1, 2, 3, 4, 5 times. Okay. If we reject, remember what I said. If we reject off of the EMA, you can now go into a lower time frame and expect to find a long, right? So we're gonna go to the 1 minute, and then we want to see price go above the 9, go above the 21 and the 50. Okay, now you can see momentum starts dying off when we have candle closures above the 9. Okay, when we have candle closures above the 9, you will probably see a pullback. If we're still, you see, pullback, then we keep going lower. Why did this one fail? Because we didn't break above the 50. All right, so here we have the 9, the 21. You can see we're respecting it until we disrespect both of these with momentum. Keyword, momentum. And we also have momentum breaking above the 50. Take that shit. All right. Here, we didn't hit the 9. If you were feeling ballsy enough, you could have entered here. This would be your, I'm guessing.
Ballsy.
Huh?
No, I'm saying ballsy. I like that word.
Yeah. This would be like your new resistance, I guess, because this is a high that got overtook momentum, right? This whole thing right here. So theoretically, yes, this is an entry, but I would preferably want to see the 9 get hit. So we're going to go to NASDAQ and see if it did. Wednesday 18th, 3:33 p.m. Wednesday 18th, 3:33 p. M. Okay, right here. All right, I'm not gonna lie. I would have market ordered that bitch. I'm gonna be real, bro. I wouldn't have had a limit order there. I would have fucking the moment I see it this close right here, bro. Like, all right, be real with yourself, bro.
On God, bro. He would have said, "Fuck it, bro. Fuck it, bro." He would have said, "Fuck it."
Like, bro, do you
What's up?
really give a fuck about 4 points, bro? Like, be real, bro. Fuck out of here, bro. Fuck that shit. All right. But damn, it is a crazy stop, bro. I won't lie. Shit. I mean,
Would you market it or not, bro? Would you
yes,
market it or
yes,
not, bro?
yes. I would have 100%,
Okay, bro.
without a doubt, without a doubt. Because I saw price rejecting the 15 minute. But yeah, that's basically how I use it. Also, it's the 9, 21, 50, 200. 200 is the most significant. This is based
And
off
it might
previous
have
days of
tapped
data.
something.
Huh?
It might have tapped something on the 15 second. I know you don't have access to the 15 second, but that's still an extra confluence that you could use. You're on
Yeah,
TopStep you have TradingView Premium or some order flow platform like
yeah,
MotiveWave. It most likely tapped something on the 15 second as well.
100%.
So it was
But
probably that was a phenomenal trade.
yeah, this one's golded actually. I won't lie. But basically, to give you the rundown, the 9 is used to support the trend. Basically, you can see we're supporting, right? And then if we break below, that's when you kind of see like, oh shit, we broke below the 9, momentum's dying off, and then we break below the 50 and the 21, also the 200 EMA. Price just starts chopping up, chopping up. There's no higher time frame tap here, by the way. That's why this is useless to me. So, where was it?
Bro, Lucas, I'm gonna say something after you finish recording, bro. I just figured out something peak, bro. Oh my God, bro.
But yeah, this is how I use the EMAs. Again, I just wait for the higher time frame tap, and I kind of gather my bias. So the thing is, I get daily bias just off of market structure and like candle anatomy itself. If that makes sense. So daily bias does play a role in it, but I wouldn't say it's fairly easy to switch your bias with EMAs, but kind of, kind of. But like here, for example, right? We've tested this 200 EMA on the 2 hour multiple times, right? 1, 2, 3, 4, 5, right? So if we break above this with momentum, right, on a lower time frame, we could probably find the entry to go long, and we're gonna target the 4 hour 200, right? This would be 202-point move. But let's say we have rejection yet again, and then on the lower time frame, you could probably catch a short. And what would it look like in the lower time frame? You would want us to be like this, right? Let's do this one right here. I'm gonna draw this out real quick.
If we do gap up, on NQ, I will be taking that short on the forward 200.
100%. Me too, bro. Not gonna lie. All right, right here.
I'm gonna limit it.
Here, look, peep, peep, peep. All right, so in the 2 hour, we have rejection. We went. All right, first of all, this candle opened, then this candle flipped to bearish, right? And then we just shot up. We shot up. When we go above the 200, you can see we start going lower, 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 lower. It's perfect. Now, you drop down to 1 minute to 5 minute. You can see when we reject above there, I think it was 2 hours. So it was here actually, okay? We have the 9, the 21. When you start seeing bodily closure, right? Body closure below the 9, momentum will start dying off, okay? Momentum starts dying off. You can see we were bullish, bullish until we have that one specific candle close. Boom. You can see we start chopping up like crazy. Then we have a candle closure above the 21. This is when I'm looking at the chart. I'm like, oh shit, there may be an opportunity. Boom. Momentum closing below the 50, okay? So now this is Friday 20th, 11:15 a.m. We go to ES, Friday 20th, 11:15 a.m. 11:15 a.m. All right, here. Price at 11.19 hits the 9 after we break the 50 EMA with momentum, okay? Fucking after. Engrave that into your head. After we break the EMA. So now we go back to NQ because that could be an SMT. Oh, what do you know? SMT. ES hits the 9. NQ does it on the 1 minute. Take that shit. Take that shit. Click the button. Stop being a pussy. Just take that shit. 10 to 15 point stop. Fucking let it ride, right? Let's say on NQ you entered up here.
You being so mean to the
move,
viewer,
right?
man.
Fuck it, bro. Pa la pinga, you know? Whatever. All right. We hit the 50. Fuck it. Boom, there's your trade, right? Realistically, you would want to exit at the 200 EMA, but yeah. All right, now here again, we're gonna go to the 1 minute. Regardless, if you didn't exit, you would have been at break even, or you would have trailed your stops. So that would have been a winning trade 100%. Okay. Or when you see price close above the 9, like I said, remember when price closes above the 9, you'll start to see momentum falling off. Okay. Then boom, we close above the 9. You see momentum falls off. Let's say you exit here, you got juice, bro. Yahoo was watching you, bro. Look at this shit. Close, cook, bro. You would have been mad as hell staring at that screen. Like, damn, bro. How many points you missed on that? 36, because you're a complete.
Bro, paper hand of doom, bro.
Yeah, bro. That shit would have got me pissed off. All right. Now here again, we go back to the 2 hour 200 EMA. Okay, same shit. All right, same shit. Guess what? Body closure below the 9. Boom. And this one closes below the 21, right? Here, realistically, you could enter off of this. I like it when we close below the 50, like I said, because to me, that's seen as like the bias flipper, if that makes sense. So we're going to see on ES if we did something else. Let's see. This is 12:02 Friday. 12:02 Friday. All right, right here. All right. We close. It's basically the same shit. We close below. There was no momentum. This is still favorable though because remember higher time frame. We did have the tap of the 200. I think it was on the 2 hour. I believe it was on the 2 hour. What was it? Oh, that's ES. Yeah, it was on the 2 hour. So regardless, that shit would have worked 100%. So yeah, that's basically how you use the EMAs. I mean, that's how I use them personally. I like using them like this. This is low-key fucking goated, I won't lie. I mix it in with price action and candle anatomy, like I said. So, yeah. Also,
shout out VV.
Yeah, VV is the GOAT, bro. VV low-key put me on.
Volatility vol.
So, if we, let's say, you can stack EMAs with ICTP to your raise. That works as well. If a 200 EMA taps it and wicks and closes before crossing it, it's another entry trigger. You can enter off a 200 tap with a tight stop. I don't do that. Only on the higher time frame if it looks like valuable to me. Let's say we have a bearish sellout. Like let me see if I can find an example. Like right here, right? Let's say you trade ICT, right? Higher time frame, buy side liquidity got took. This candle was bullish, right? And then we start going lower. Boom. My stop will be above here, and then I would enter right below it, right? How big is this stop? The moment we go below 22 point stop. It's kind of crazy, but that's what that means. Look at multiple time frames to see what price did with the EMAs. That is like literally you have to do that. In my opinion, I've seen with time that in whichever time frame the ones are getting respected the most usually work the best, honestly. What else? If price isn't respecting the 21 EMA on higher time frame, it's showing weakness as well. That's really about it. But to be honest, the 200 EMA is your best bet. That is the best one. If we're above it, look for longs. If we're below it, look for shorts. You can use it as entries. You can use it as TPs, exits. If EMAs are curling down or up and the 9 is still respected, you can hold trades. Like I said, when you see that body closure, let's say if we're bearish, you see a body closure above, you probably see a pullback or it just complete dumps, right? But like right here, we have a candle closure above with momentum, and then we start just chopping up, slowly going higher. Price goes above the 200 EMA. You could wait for momentum, and then you could possibly enter off of that momentum, or you could enter off the retrace, targeting something. You know, that's how you use the EMAs. Me specifically. But yeah, that's really about it. You want to say something or not?
Who, me?
Yeah.
Lucas is a fat chud. Yeah.
Yes, I agree. I'm a degenerate gambler. This is not financial advice, by the way. None of this is.
This is indeed financial advice. This is indeed financial advice. Every trade you see, put 15